Previously we discussed the concept of the reverse charge mechanism, and we highlighted that it is an indirect tax model that shifts the responsibility of the reporting and payment obligations for either the value-added tax or goods and service tax from the vendor to the customer. Good. Also, it is important to highlight that reverse charge mechanism would apply on different kind of transactions, including both domestic and non-domestic transactions as well. Also, reverse charge mechanism would apply on both goods and services. Well, so, when we should apply reverse charge mechanism? That's what we are going to discuss today in this video. Hit the subscribe button and let's get started. At the beginning, we should highlight that we would have different cases where reverse charge mechanism is required to be applied, and such would depend on the rules of the country where you are applying such mechanism. So each jurisdiction would have its own reverse charge rules. However, the possible scenarios where reverse charge mechanism is required would be as follows. Let's start with the first scenario, which is purchases made from unregistered person. Purchases from unregistered vendors, including either goods or services, would be subject to reverse charge mechanism. So, the party who is receiving the mentioned goods or services will be required to calculate either the needed VAT or the GST and to pay such directly to the governmental authorities instead of the supplier. And here reverse charge would be used as an option to confirm the unregistered business and to push them to voluntarily register accordingly, as in that case registered businesses would prefer to deal directly with other registered businesses, trying to avoid complications and to streamline the compliance process. Similarly, imports would be subject to reverse charge mechanism as well. So as we are talking about unregistered person, then accordingly purchases from non-resident vendors, including either goods or services, would be subject to reverse charge mechanism as well. So, the importer will be accordingly required to calculate either the needed VAT or GST to be paid to the tax authority. Well, another item to highlight here, which is the purchases made through e-commerce platforms. Businesses now are using e-commerce operators to sell products or to provide services. And here also, like imported products or services, e-commerce operator wouldn't have a physical presence, and accordingly purchases through e-commerce, either goods or services, would be subject to reverse charge mechanism as well. Also, it would depend on the tax rules within the taxable jurisdiction to determine the needed procedures to calculate and to collect the indirect tax amount in order to be paid to the tax authority accordingly. And finally, with the last item here, which is the purchases made for certain goods or services. And here once again, it depends on the taxable jurisdiction. We would have a list of some specific products or services that would be subject to reverse charge being a law requirement. So, regardless the seller is a tax-registered person or not, the party who is receiving the mentioned goods or services would be required to apply the reverse charge mechanism. Well, important point to mention here that, as we highlighted within our previous video, that upon applying the reverse charge mechanism, normally the customer would report the calculated tax amount as output tax and at the same time has the right to deduct the same amount as input tax, where the tax results would be nil, triggering no cash flow. Also, we emphasized that in some jurisdictions, full input tax deduction would not be allowed, and accordingly tax payment might be in place. Like and subscribe if you would like to see more videos, and thanks for watching TaxGate.